Good morning, good morning, good morning. It's 8:01 a.m. Chicago time on Tuesday, the 29th of November, 2016. Thanks for joining me for another Trader Bite. Again, the purpose of these Trader Bites that I'm doing every day is to continue a conversation of consistently approaching the market in a routine way to establish a plan for the day. It's better to come in with a plan that doesn't play out than to come in with no plan at all. That's been my experience of almost 16 years of trading, and I'm doing this as a public service, really. I've always been in a trading community, so this is one way to extend that electronically. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The key the key news just is really crude oil currently trading at 45.30, down almost 4%. Got down as far as 45.05. I'm quoting the January 2017 contract, CLF7 or CLF17. The news is that Iran is not likely to cut oil production. Of course, that does not mean that it won't maintain the current levels. It says, the newsline says, Iran will maintain production levels that were agreed upon at the Algiers meeting on November 28th. Saudi Arabia was offering Iran freeze at 3.7 million barrels per day compared to 3.97 MBD requested by Iran. Both delegates had made proposals at OPEC meeting. OPEC experts reportedly did not agree on output deal at a technical meeting, as Iran and Iraq said to still have reservations on output cuts. So there's a lot going on. There's also a meeting tomorrow at the OPEC headquarters in Austria. So that continues to be the headliner there. Case-Shiller just came out. Case-Shiller covers housing prices, the housing price index across 20 cities, 20 major cities in the U.S. Month on month, it shows 0.37% versus 0.4. Year on year, it's weaker at 5.08% versus 5.2. In other news, China has imposed a limit of capital outflows. Regulators are clamping down on money transfers abroad. $5 million transfers have to be or higher have to be reported to the State Administration of Foreign Exchange. Other than that, not seeing too much on the overnight. Looking at today, the number we have left here is consumer confidence. U.S. consumer confidence is coming out at 10 Eastern for November, expecting 101.3. This is a potential mover. And then as far as speakers, in about 10 minutes, we get Feds Dudley in Puerto Rico, or actually Feds Dudley on the Puerto Rican economy. And then at wait a minute, that's at 9:15. Yeah, that's in 10 minutes. And then at 12:40 Eastern, we're looking at Fed Speaker Powell at coming out at that point, and then we have an 11:30 4-week bill auction. Let's switch gears here and look at what was expected yesterday versus what we got. Yesterday's expectation, we opened in range at the time of the trader bite. The market was trading at around 2206, right on the edge of Friday's range. And so the expectation was for a choppy open, a sideways open, an attempt higher towards 2207.75. 2207.50 is actually the point of control Friday. Remember, Friday is a shortened day, but it remains on my charts because the underlying equity market was open, so it is substantiated, even though it was light. And then the expectation is for sellers to step in and rotate the market down through the gap zone, push to 99.5, which is the the point of control of the last 3 days or the prior 3 days, and then rotate back up into the range. So that's the main idea, given Friday's stance. So a push up to find sellers, and then down, and then rotating back up, because the market's generally been bought in the afternoons. If you look back, more times than not, the probability is on the side of buyers in the afternoon. Uh, here's the second hypothesis. Second hypothesis is a quick drop into the gap zone, gap mid, 2203.50, and then a pop back up to the point of control, pull back, and then continue higher to the highs left behind on Friday, which are all-time highs. And then 3 was a push up that finds sellers, aggressive sellers, and a drop into the prior range, the box that I drew here, the prior balance. The Hypo 3 was looking for aggressive selling. What we got was actually more interesting than that. We got Hypo 1. So this chart here simply shows, here's where we opened. This is yesterday's open. We got two-way trading on the open, so that sets our opening swing. We break the opening swing on the high side, we break the opening swing on the low side, and then we get that pop, and it pushes all the way up to 2209.50 instead of 2207.50. We covered the 2207.50 back here, and then we get this impulsive move down. And if you were in the S5 chat room, I warned about the potential for this not to sell this in the hole here into the prior day's range. Remember, the range before Friday was down here. It was in this area, and so this is Thursday's high right here. And I warned against selling this down in the hole. It pulls back to Friday's low and the IB low. There's a fair amount of confluence here. IB low, Friday's low, an LVN right here for a quick rotation down 2.75 points, and then the pop, which was what was expected. So up to this point here, we have Hypo 1. And then on the close, we had some pretty good selling for a neutral day. So here's a neutral day. We took out the high, we took out the low, makes us neutral. We take out the high again, which is actually fairly unusual, except that the IB range here is pretty weak. It's only 3.5 points. And then we finished near lows of the session, making this a neutral extreme day type. And what I commented on at the end of the session yesterday was that in general, the expectation is, because it showed a neutral extreme close, this becomes really important that as long as we don't take back the 2205.50, 2206 area, we are likely to continue lower. And this potentially marks a short-term top in the ES. So in general, markets, when they rally and they reverse, in general, the reversal occurs on a neutral extreme or neutral day down. In general, we don't have a bullish candle at the top and then a bearish candle the next day. Okay, we generally do go one-time framing up, neutral extreme down, a resting day, and then a continuation day for the reversal down. That's what I'm basically predicting here. Remember, the run-up is really unprecedented. We've been one-time framing up for quite some time. It goes on and on and on with a one-time framing up, and then yesterday we broke the one-time framing up and closed neutral down. So my opinion is that we're likely to start rotating lower in the short run. I'm not saying this is the top. Go borrow money and sell short. That's not what I'm saying. All I'm saying is short term, the sellers appear to be exhausted for the time being. So that's what we got yesterday. If you want to see, one of the things that I like to review on Mondays is the big picture, and to look at how things have been handled. Now, if you this is a weekly market profile chart. You, if you're not a believer yet in the ability of uh, volume and market profile in general. I prefer volume profiling over market profiling, although I refer to both. I go to market profiling for the bigger picture. You could see that, here's a naked point of control. The market moved down at the end of October, tested the point of control, closed at lows, and then it pushes up the next week. And there's your next key naked point of control up, tested that, rested. The week after that started lower and has pushed higher. Now we have a naked point of control at 2180. Um, and so this is likely to be the next rotation point down. And I apologize. I just said the sellers appear exhausted. That is incorrect. I'm being corrected. I appreciate that. I meant to say buyers appear to be exhausted in the short term. Thanks everyone who pointed that out. And so the next rotation down is likely to look for 2180. Again, I'm not predicting that that'll be today, but this is how things are shaping up. Looking at the overnight is very methodical. We're back to the normal trading, back to normal trading from the holidays last week. The overnight session continued the neutral extreme theme down. It tested lower, chopped around through the overnight session, and then it pushes up. Where does it push up to? It pushes right up against yesterday's point of control. Again, 2205.50 is the price. It went to 2206. Makes makes another push, lower high, and now rotating down for an M formation. The mid is actually the pivot point for that M, and a price that I'm watching, and that's 2202.50. 2202.50. I'm watching out for that on the open today. So the expectation is for it to try to fight this back and then give some up, and then of course look for the buy opportunity late morning again. And so that's, the market still sees value. Now, for those of you who swear by the fact that the market is just overextended, I'm here to remind you that there's no such thing as a market that can't go any higher after a big run. I mean, for anybody, I was there during the tech boom. I was there during the real estate bubble, and you just had so many people get crushed, and then some of them, like in the Big Short, finally get paid. And that to pull a trade like that, you have to have a lot of research and a lot of resources. But don't mistake the idea that the market can continue and continue and continue, and based on some just general fundamental values, the market still has room to the upside, especially since the market is expecting a large stimulus package from the new administration on transport and just a lot of spending. It's the way you get a second term is to spend a lot. And so that's what the market, I think, is pricing in. If I bring in yesterday's trading, you could see here the gap zone that was here. There was a gap zone marked here. That's gone off your flex levels. And as I bring in this yesterday's volume, you can see how it's filling in below, and it's untouched on the upside. And so where we end up here is we end up right smack dab. We're trading right here, right now, 2200.75, and we're right smack dab against the point of control. I believe there's room down to 2190 and 2180 if 2205.50 holds, as I said. So that's a key plan for the day. It's a lot of talking. I'm out of time here. Let me just extend this out, and go over the hypotheses. This morning, I'm looking for an open auction. I'm looking for early buying, a burst of early buying to try to push up against that mid on the overnight session. I'm looking for selling to kick in, and I'm looking for this to test lower. I don't expect it to go far on the downside. I expect the pushes down to be confronted with buying, value buying on the higher time frames. So Hypo 1 is looking for push up early, find the sellers, push down, and then walk up in the afternoon and end up somewhere around this MC point of control. That's what I'm looking for on Hypo 1. Hypo 2 is expected to be two-sided, choppy as the buyers sit and wait for better prices to buy. Sellers, of course, getting smacked every time they've sold short down in these areas. So I expect it to chop around, but eventually I'm looking for it to start moving lower, breaking lower, and then again without the early buy in Hypo 1. If we drop right off of the open on Hypo 2, the selling is not likely to be as strong as if we push up. It's much, much better when we push up. And those of you who read Jesse Livermore's book, it's an age-old thing. Like the best shorts are when the market tests higher and fails. It gives us a much better view on who's participating in the auction. And so a short that comes off right off the get-go is likely to be bought up later in the session. So Hypo 1 and Hypo 2 are very similar, except that Hypo 1 is looking for a push-up failure and a push-down, which will likely be more aggressive. And so that's what I'm looking for there. Hypo 3, because we are still trading this big channel, Hypo 3 is simply looking for a failed attempt lower, and then for the market to take back what it has given up yesterday and to start moving back up. We're right up near all-time highs. We tend to not give those up so easily, and so that's what Hypo 3 is looking for. And I'm putting 3 hypos on for the last couple days because we are right up against all-time highs, and there's a lot going on in this area. Keep an eye on Crude. Crude is trading very interesting. Look at this gap here in crude oil. So we have yesterday a perfectly balanced day, just a beautiful example of a market coiling, compressing, balance leading to imbalance, and the imbalance is down. So this is likely to look for value down here. We're approaching a gap zone, attempt higher, and then continue to sit down here. I expect us to build a profile down here as we wait for what's going to go on with tomorrow's meeting. So crude oil's been the mover in the futures market. Just trade with care. Anyway, I'll leave you with those thoughts. Hopefully you're able to turn that into ideas for your own trading and carry that forward. Make sure you've got your risk under control. There isn't a single trade out there that is worth more than a small portion of your account to find out if the market agrees with you. I hope that makes sense. Good luck, and I'll catch you tomorrow. Take care.